paying tax not to be considered as a burden, but it should be considered as our responsibility. In society, the tax is considered as a cost of living, but we should consider it not as a burden, but it should be considered as our responsibility toward our nation. So today we try to understand what is tax, types of tax, and other important things related to tax. There are two types of tax. First is direct tax and second is indirect tax. Direct tax is directly levied on the income, and indirect tax is levied on the price of goods or service. Direct tax is also called progressive tax because as income rise, the tax on income is also rise. But in case of indirect tax, it is called regressive tax because the percentage of tax on price of goods or service are remain same for all people irrespective of their. Now the question arises, why tax? The answer is that the tax constitutes the basic source of revenue for the government. Such revenue are utilized by the government for the common welfare like road, infrastructure, defense, provision for education, etc. Today our main focus on the direct tax. The administration of direct tax is looked by the Central Board of Direct Tax. They have authority to make rules on direct tax and circular also as required. The Income Tax Act come into force on 1st April 1962. In income tax, the tax is calculated on the total income. To determine the total income, the first step is to identify the residential status. There are mainly three types of residential status. First is resident and ordinary resident. Second is resident but not ordinary resident, and third is non-resident. There is also concept of a deemed resident. By determining the residential status, we can understand whether income earned outside India is taxable in the hand of assessee or not. For example, if the income earned outside India, it is taxable in the hand of resident and ordinary resident, and it is also taxable in the hand of resident and not ordinary resident, but it is not taxable in the hand of non-resident. After the determination of residential status, the total income of assessee is divided into 5 heads of income. The first head is income from salary, second is income from house property, third is profit and gains from business and profession, fourth is capital gain, and fifth is income from other source. We take an example to understand the 5 heads of income. In first head, income from salary. Income received by an employee from his employer is considered as income from salary. The second is income from house and property. For example, Mr. A gives his house on rent to Mr. B, then he received the rent from Mr. B. Such income is taken under the head of income from house property. Third is profit and gain from business and profession, covered all the business income. And fourth is capital gain, that is a person sell his property to another person, then the gain he received is taxed under the head of capital gain. And the fifth is income from other source, that is income which are not covered on the above 4 heads, it is covered under the income from other source. For the computation of income under 5 heads of income, the next step is clubbing the income of spouse and minor child. The provision are provided for clubbing of the income of spouse and minor child. Some income of spouse and minor child are clubbed into the income of assessee. After that clubbing, the next step is set up and carry forward of losses. That means if in any previous year the loss occur in any 5 heads, then for how many years it can be carried forward and set off against the next year income. After that set off and carry forward, the next step is the computation of total income. After computation of gross total income, the next step is deduction. By deducting all deduction, we get the net total income. On net total income, that income tax is levied as per the slab rate system. The slab rate under income tax is like if an person earn income up to 2.5 lakh, it is taxed by 0%, and if the income from 2.5 lakh to 5 lakh, then it is taxed by 5%. Income from 5 lakh to 10 lakh, it is taxed by 20%, and income above 10 lakh, it is taxed by 30%. For senior citizen and super senior citizen, there is in year 2023 there is a new tax slab rate is provided, that is income up to 2.5 lakh is taxed by 0%, income from 2.5 lakh to 5 lakh is taxed by 5%, income from 5 lakh to 7.5 lakh is taxed by 10%, income from 7.5 lakh to 10 lakh is taxed by 15%, income from 10 lakh to 12.5 lakh is taxed by 20%, income from 12.5 lakh to 15 lakh is taxed by 25%, and income above 15 lakh is taxed by 30%.